Trade management. In this lesson, we'll focus on trade management. We'll cover 7 topics that will make your trade management more efficient and your trades more profitable. We are going to start with a quick watch list, perfect risk late entry, trailing stops and risk-free trades, early exits, ideal timeframes and instruments to trade, and high impact news. If we start from the beginning, quick watch list. Start your day with making sure you know what instruments are really worth your time. Quickly go over all instruments that you usually trade and find which pairs have clear trend. Use our dashboard to get faster trend readings. Try to make a separation and build your primary watch list. Pull all the instruments that have the same H1 and the H4 trends pointing in the same direction to your primary watch list. Now, let's do a quick demonstration how this should work in the real market example. So I'm going to show you more or less my most traded instruments, and I'm going to build a watch list with you guys over here. So first we have the Euro USD. We don't have a clear trend since bullish is for the H1 and the bearish for the H4. After that we have the dollar yen. We have the clear downtrend, so that's fine. After that, the pound dollar, we have the bullish trend on both H1, H4. At the Aussie dollar, we have the mixed signal, so nothing there. Pound yen, we have a clear downtrend, so definitely we can put that on our list. Next, dollar Swiss franc, mixed signal since 1 hour is bearish, 4 hour is bullish. Aussie CAD, we have bullish trend, a nice trend in both time frames, so all good here. Aussie Kiwi mixed trend, so we can skip that. Euro Aussie, we have what? We have down for the H1 and up for the H4, so mix, nothing there. Euro CAD, a nice bullish trend. And the Euro Yen, nice bearish trend, so these two we can keep. Euro Kiwi, we have mixed signal, and for the Bitcoins, we have a nice signal for the upside. So at the end, in just a few minutes, we found the best potential trades for a potential conservative play. So we have the Bitcoin, Euro Canadian dollar, Euro Yen, Pound Yen, Aussie Canadian dollar, Pound dollar, and the Dollar Yen as the potential trades for us. From this point, we need to turn our scanner to search for the setups, but at least we are searching only for a conservative place. This method is only one of several ways how to create a simple watch list. We are going to go deeper and explain more ways how to find the best trades on our webinars. To be exact, we are going to have around 10 to 15 different ways, even some automated ways, how to read that market and finding every single day what's the best pair to trade. So definitely check the webinars. Late entry. Sometimes you will miss your entry point. However, entering the trade after your ideal entry is still possible, but you need to be selective. Conservative late entry. You are allowed to enter the trade only if the first 2 candles after the signal arrow. Enter the trade only if the price remains around your original entry level, while using the stop loss and take profit from the original entry point. In case the market moved more than 10 to 15 pips from the original entry, you should skip the trade. And for aggressive late entry, you are allowed to enter the trade after your signal candle closes. Just use conservative entry point instead, so first candle after the signal arrow. The easiest way to explain this would be to go over one example. So this was the signal arrow, and let's say this was a conservative play. So original entry would be the first candle after signal arrow closes, but you can still enter a trade if that candle closes, but the next one is still around that entry point. So if you don't have much momentum, you're still fine to enter a trade. Let's say this was a potential aggressive play, and for the aggressive plays, we want to enter right after we get that arrow. So I pointed at the original entry point, and for the late entry, you are fine to enter after that original signal arrow closes. Perfect risk. Getting a perfect risk setup is one of the keys to becoming a successful trader. Forex Master Levels provides you almost an ultimate trading experience, so you have a lot of time to plan your trades and manage your risk. Every trade that you take should have predefined risk. For best results, you need to use the same risk for each trade, and an ideal risk per trade is between 1 to 2%. So just select your perfect risk per trade, and from this point, just continue to use the same amount of the risk for each of your trades. Example, if you have $10,000 trading account and you select 1% risk per trade, your position should not lose you more than $100 ever. Next you need to plan is your weekly risk. Define how much capital can you afford to risk every week. If you reach your risk per week level, you must stop trading until the start of the next week. Ideal risk per week is between 5 and 8%. This part is really crucial, just because I want you to pay attention on your money, and I don't want you to lose your account fast. So just select some of these number between 5 and 8% because recovering from the 5 to 8% loss is definitely easy and possible. But if you set yourself, let's say, at 20-30% risk per week and you lose 20 or 30%, it's going to be much harder to recover and get back to the break even. We are going to cover more about risk in upcoming training, so just check the members area for that subject. Trailing stops and risk-free trades. While you are in a trade, you should always look to minimize your total portfolio risk. That's why a good traders will look to move the stop loss to the entry point when the time is right. That's what we call risk-free trade. In the FML system, there are a few options to create risk-free trades. The easiest way is to wait for your trade to reach 1-to-1 risk reward, and after that you can freely move the stops to break even. Or you can wait for your FML channel to come towards your entry level and you can move the stops after that. Let me explain you moving the stop loss to break even with the channel on this example. So if we see this bearish arrow and say this was our potential short signal, and we say this was our entry point, we would wait for that red channel to come to that level, and that happened here. So only there you are fine to move the stop to break even. Of course, you can use that a 1-to-1 risk reward idea also, and both are really good. It's more about the situation, because sometimes one is going to be better than the others. Let's say here we had a bullish signal, so let's say this was our entry point. So we are waiting for our green channel line to come to that entry point, and that happened here. So after that, you are fine to move your stops to the entry point, creating yourself a risk-free trade. Early exits. There are a lot of things that move the market. We're not going to reach our take profit every time. So we need to watch for a potential exhaustion formation from our indicator. If you are in a trade and you get an exhaustion alert, you can do one of two things. Close the entire trade. This is probably better choice for aggressive traders. Or close half of your trade and move the stop loss to break even, just to make sure that you can't lose any money. But also pay yourself for taking the trade at the first place. On the images on the next slide, you'll see the place where the exhaustion indicator appeared during 2 of our trades. So over here, EUR/KIWI trade, we were in the long trade, and around the middle of our trade, exhaust appeared. Since this was a conservative trade, I decided to book half of the trade and move stops to break even. And the second trade over here, we had a short trade. Again, you see that exhaustion appeared around the 1-to-1 risk reward, and either you are going to move the stops to break even and close half of the trade, or close entire trade if you don't feel comfortable. Ideal timeframes and instruments. For aggressive trading, the ideal timeframes are 15 minutes and 30 minutes charts. For conservative trading, the ideal timeframes are the 15 minutes, 30 minutes, and 1 hour. You can go higher, of course, with the conservative trades, but definitely I found that M15, M30, and the H1 work really good. Our system was optimized for this group of instruments. From majors, we have the Euro USD, Dollar Swiss franc, Pound dollar, Aussie dollar, Kiwi dollar, Dollar CAD. From the yen group, Dollar yen, Euro yen, Pound yen, and the Aussie yen. From the crosses, Euro Aussie, Euro CAD, Euro Kiwi, Aussie Kiwi, Pound Swiss franc, Euro Pound. From the cryptocurrencies, Bitcoin, commodities, gold, silver, crude, and from the indices, Dow Jones and the DAX. These instruments were tested and preset for best results already, but you can use our system on any instrument your broker offers with similar success rate. To prevent people from using smaller timeframes like 1 minute or a 5-minute charts, we have disabled our signal indicator so it will not work on them. So every time you switch between 1 minute and the 5-minute chart, you won't see any signal arrow appearing. High impact news. Trading during the high impact news is always hard, so if you don't feel confident in your abilities yet with the system, I want you to skip trading the news. If you still want to trade, you should only be using a conservative setup with a few changes in the rules. Your risk per trade must be smaller, half of your normal size. So if you use 1% for a trade, definitely you should drop that to a 0.5% during the news. And you should target a 1-to-1 and 1-to-2. So more or less, your entry is the same as in the conservative, but your take profits are the same as aggressive trades. So over here, we can see the dollar yen really dropped strongly lower. We got that bullish signal arrow, and we got that confirmation from our MSC and the SSC. So in theory, you can look to go long, but trading aggressively won't always be the good thing, because I want to make sure that that strong candle closes so I get the best possible stop loss. And that's why only option here is to take the conservative approach. And don't forget, you need that 1-to-1 to 1-to-2 take profits, like 1-to-1 as take profit 1 and 1-to-2 as your take profit 2.